Hey guys, welcome to the newsletter. This is for August the 13th. I'm recording this on the 12th. We're going to look at three really good ideas that you should look at right now. The reason this is even more important right now, this is the S&P that I've got on the screen here. And as you can see, we've rallied. This is a voodoo tree line. And we just can't get over it. We keep hitting it. I think we probably fail and come back down a little bit. I'm not expecting this. Or we could go this way and keep going, but that's a whole nother discussion. So a lot of indecision here, a lot of back and forth, a lot of chop after this crazy run we had here where we went 500 points in about 4 days. The market, in my opinion, has to kind of digest that move before taking it up to the next level. So we'll see. But we want to have some ideas that we can have in the meantime, and honey badger ideas, things that are off the radar, kind of outlier stocks. And I've got three for you. So let's jump right in. The first one is INVX, Innovex. Let me put my moving averages up here. So Innovex International here. Good looking chart. This is an oil and gas products and engineering services type company, tools, that kind of thing for the oil and gas sector. Obviously, we want to have some exposure to the energy sector. Throughout all the videos I've done here in the newsletter, I always kind of touch on some of the energy names because there seems to be a lot of good value there. So take a look at this, Innovex. Again, solid chart, lower left, upper right. We're above, that's the 200. We're above the 50. We're above the 20. Looks good at this point. It's a lower price stock. I like these. That's one of the things that I kind of try to highlight in the newsletter, are things that are off the radar you're not going to usually see, but things that have some volume coming in them and have good setups and have good earnings and things that all the reasons we need to look at them. So number one, like to have at least three good reasons to buy one. This chart alone is probably number one, but 3-year sales growth is 40.3%. Check. 3 years earnings growth is 5,247%. Sorry, I'm reading it over here. I've got it on my list of stats. Profit margin is about 8.5%, but crazy earnings growth over the last 3 years. Forward PE ratio is about 18 times. That's pretty good. And debt to equity ratio is about 7.5%. Now, I grew up on the fundamental side at Merrill Lynch a long time ago, so I look at all that stuff. But again, at the same time, this is a good looking chart. Now, they've already had earnings here, so we're good to go past that. And they've got short interest of about 3.3%, kind of roughly. So all that lines up to be a pretty good setup here in Innovex. Let's see I don't know what the volume is like. Let's see what their volume is like. Not a lot of volume, but again, it's a $29, $30 stock, so we could buy the stock. It does have options. It doesn't have weeklies, but we could buy the stock. We could buy options on some of these, etc. But that's a good place to look. So put that on your radar. The second name I want us to look at is Dynatrace. Dynatrace is a digital marketing company that helps digital marketing, digital assets, things like that. That is a huge place to be in the future going forward, right? The chart here, not quite as clean a chart. It's about a $50 stock, but it's come down, had earnings there, kind of stumbled a little bit. Those earnings were really good and come back up. Now we are above the 200, we're above the 50, we're above the 20. So this looks fine. Ideally you'd like it going like that, but this is again kind of an under the radar, off the radar type stock, right? 3-year sales growth is about 20%. 3 years earnings growth rate's about 60%. Still, smoking hot. That's getting it right. 60%. Profit margin is about 8.1%. It depends on a lot of variables with the stock. That's still a very good profit margin with increasing sales, right? Short interest about 3.37%. Let's look. I didn't look at the volume on this one either. Right there, 3.3 million. That's okay. Don't have weeklies, but again, it's a $40, $49, $50 stock. We could buy the stock. We could do all kind of cool, interesting things with that. So put that one on your radar. So that would be number two. And for number 3, I am going back to old school stock here and looking at Apple. And I haven't highlighted Apple. I don't think I've ever highlighted on this newsletter, but it's come back down. They had earnings it's come back down. It has come back on the radar. There's volume coming into it. Everything looks pretty good. Obviously, we know what Apple is, mobile technology, essentially. They announced a $100 billion stock buyback. Of course, we got the iPhone 17, iPhone 18 coming out, I believe. All that is projected out into 2027 to be, I don't have the exact number. It's a giant monster mountain of cash coming their way. Also, Apple is de-risking from China, using other suppliers, things like that, trying to de-risk themselves or de-leverage themselves a little bit from China. That is a very positive thing. So here's the difference. When I was talking about the earnings growth rates and the 50, 60, 80, 1,000%, whatever, Apple's earnings growth rate, 3-year earnings growth rate, is only 7.3%, but it's a giant. It's the difference in the battleship in a ski boat, right? But 7.3% earnings growth with a profit margin of 26%. So, that's a crazy good profit margin, right? RSI is about 36, so this looks like a good place to consider coming back in here. Now these are 34 EMAs. We've got a Darvis box right there, so around $300. You could enter here, and you could, if you were trading it, you could put a stop right under here in case it does break lower. If you're using options, of course, you could limit your risk by the number of contracts, etc. And I can help you do that if you just let me know if you want to take a look at that. If you are in my trading room, we're probably going to be taking a trade in Apple here pretty soon. We're at least going to look at it for potential. So those are the 3 trades that I would highlight for you this week, or I want to highlight for you this week as good candidates. It's been hard to find good things to look at, honestly, again, because this market's kind of back and forth and hard to tell where we're going. So with that, let me wind it up. Let me mention one thing real quick. Let's see if I can find it. So if you get a chance, go to my YouTube channel here. This is my YouTube channel. It's called Trading Bruce. I did this video last night on SpaceX, a low-risk way to trade SpaceX. So check that out. That's a good video. You'll like to see that. So I'll walk through step by step, literally setting the entire trade up, go to the looking at volume, open interest, all that kind of stuff. Do a little detective work. So go in there and check that video out. I've got a lot of videos in here for you. I don't mention this enough. I've got 75 videos in here of all kind of different stuff between hedging and all kind of cool stuff. So go and check that out. Obviously, like and subscribe. I have to say that, of course, but check that out. That will help you out. A lot of good information. And also let me know if you want me to do any videos on anything, and I'll be glad to put a video together for you. So with that, let me wind it up. Take a look at those 3 stocks. Let me know if you have any questions, and I will see you guys at the next update. Thanks. Take care.